Hey everybody, Omar here from Sasco Digital, and today I'm going to cover what's happening in China and why it really doesn't matter. You're going to hear a lot of people talking about this hash rate decline and there's people freaking out about it. I can tell you right now, they don't know what they're talking about. You're going to understand it. So check this out. In a previous video, we covered the supply curve. You know that this blue line here represents the amount of Bitcoin that's being created on a network, where here there's 18.7 million Bitcoin right now. That represents about 90% of the supply, and the remaining 10% is going to be mined over the next 120 years. So by the year 2140, we will have all the Bitcoins, the 21 million Bitcoins available as available supply. Now, let's get into what's happening on chain. You've heard the news. China banned mining. What does that mean? All these miners in China are now unplugging from the network, and they're packing up their miners and they're sending them over to the United States. They're sending them to Russia. They're sending them to Uzbekistan, and there's interest from all over the world to pick up these miners because it's still a very viable business to mine Bitcoin. This doesn't change anything as it relates to mining. All it really means is that momentarily there's a reduction in the amount of hash rate that's on a network. If you think about hash rate is the combined processing power of all the miners around the world that are mining this Bitcoin. And we can look at this metric right here, this block interval. The block interval is the amount of time that it takes to mine a block. Because we just recently saw a bunch of miners come off the network, it's about 25 to 30% of the hash rate decline. It's a very noisy metric, hash rate. It has to be normalized over 7 days to get a true metric of exactly how much the hash rate has declined. But we're going to go with about 30% of the hash rate declined. Okay, we see that it's now taking longer to mine a block. Okay, so typically it takes about 10 minutes to mine a block, but because there's less processing power and the difficulty of mining a block has remained the same, it's taken about 22, 23 minutes right now to mine a block. Okay, and this is what we see here with about 1,400 seconds is about 23 minutes. Okay, the other impact that the decline had is that the number of blocks being mined every day is down. So typically, if blocks are being mined every 10 minutes instead of every 23 minutes, we'd see 900 blocks per day. Now we're seeing much less. But are we worried? Are we concerned about it? There's another metric, miner revenue. Miner revenue is down because it's much harder to mine blocks right now because, again, all the miners that remain on the network are mining Bitcoin at a high difficulty. It doesn't matter. And the reason why it doesn't matter is because we have an amazing feature in Bitcoin. And what this feature is called, it's called a difficulty readjustment. And this is how, when I showed you this graphic here, the reason why Bitcoin is able to stay normalized on the supply curve is because every 2016 blocks that are being mined on the blockchain, every 2016 blocks that are being mined, we have a difficulty adjustment. So what happens during a difficulty adjustment is the Bitcoin network is looking at the total amount of hash rate. It's making a determination of whether that hash rate is higher or lower than the previous hash rate. And if it's lower, it's going to readjust the difficulty to mine a new block downwards and set that difficulty in place for the next 2016 blocks. And that's when we see mining normalize back to approximately every 10 minutes. The Bitcoin network naturally compensated for the loss of competition, because that's ultimately what those miners unplugging in China represents. It's a reduction in competition. So as miners come onto the network, difficulty readjusts up to make it harder, to make it more competitive amongst those miners to mine the Bitcoin, normalizing that supply curve. And as miners unplug and come off the network, that difficulty readjustment comes down. That's how it works. It happens every 2016 blocks, which is approximately every 2.5, 3 weeks. And we could see that the next time it happens is going to be Friday morning. Okay, you can see that here. And we expect when Friday morning comes around, we'll see we're back to 900 Bitcoins a day. We're back to 10 minutes per block. And the revenue that the miners are getting will reset back to their previous measure. Okay, and the last thing I'm going to go into here, because people love to see it, is the current price. So right now it's Monday morning, and we see that the price is around 34,766. And if we're forecasting based on what we're seeing, this is an update that I put out last week on June 24th, and it's forecasting the price. We don't have a crystal ball. We don't know if Elon Musk might tweet something or some other event happens that changes this. But based on the metrics that we're seeing and using Fibonacci levels to determine support and resistance, and we're going to tell you all about Fibonacci levels. You can look it up yourself and do your own research, but we're going to explain it. Fibonacci levels, very simply, is a way to determine where the support and resistance lines are based on price history. What we'll see that if over the next couple of weeks, the price will be ranging between 30 and 40. There's a saying in all the markets, it's sell in May and go away. People are enjoying their summer. They're out on yachts, they're at the beach, they're relaxing, especially institutional money. Institutional money is notorious for waiting until the fall to invest. But they are doing the due diligence now. There is a lot of education taking place on Bitcoin and how it works. There's deals in the pipeline. There's still a lot of activity. But typically, I don't believe we'll see institutional money return until around September timeframe, until the fall. Over the next couple of weeks, we should see some ranging between 30 and 40,000. And if the price goes above 37, then we're going to be looking for bullish continuation. And the next price level after that is 42,500. And if the price moves below 30,000, which I don't expect because 30,000 is at the mid-correction Fibonacci level. We've seen in previous cycles it hit that level and bounce off. We've seen it in this cycle. If you notice, maybe the price will hit 30,000, spike below it momentarily, but it will continue upward. That's because there's just a lot of support at that level. Bitcoiners know a good deal when they see one, but anything could happen. So if we see it go below 30,000 sustained, then we could expect that we're going to be going into a bear market. Just one more thing. I wanted to show you this before we call it a day. If we were to zoom in on what's actually happening on the blockchain, we see something very interesting. Okay, and like I said, I just explained, we identified 30,000 as a good time to buy because it's at the fib level that was always hit in previous cycles. It's also around a 200-week moving average. But here's what's actually happening on the blockchain. So this green line here, that represents long-term holders. These long-term holders are people that have low time preference, high conviction. They probably know that Bitcoin is a great investment, a long-term investment. And we can see them buying Bitcoin from this cohort here. And that cohort are short-term holders, maybe traders. So we really see traders selling. They're probably selling because of the news of China banning Bitcoin. They don't know how Bitcoin works. They may not understand the cycles, but they're selling into, I don't want to call them sophisticated, but they're certainly long-term holders. You have people like Michael Saylor in here. You have people like Paul Tudor Jones, who's allocating 5% of his portfolio into Bitcoin. And you have retail investors all around the world that understand that Bitcoin is a long-term investment. They understand that it's an open network. They see future adoption. I certainly see future adoption, so we are high conviction, and those are the type of people that are buying into Bitcoin right now. So I thought that was a very interesting graph to help you kind of put in perspective who's selling and who's buying, so what happens here is as these long-term investors buy, they're taking off all the supply off the exchanges, and that supply comes off the exchanges. There's less obviously Bitcoin to be had. All you need is a little bit of capital to come in, and then a lot of capital come in, and you get what's called a supply crunch. And when you have a supply crunch, that's when we see parabolic moves, we see blow-off tops. A little premature for that right now, but it is something that we're going to continue to watch. We're going to want to see this line here cross through that line there, and then we're going to start to see price appreciation. If the trends continue, we're going to start to see price appreciation. We're going to start to see the headlines return. We're going to start to see interest. We're going to start to see big institutional that may have been shooken out over here and may say, you know what, we're going to sit on the sideline. It's a little too frothy right now. It's a little too excited right now. We're going to wait and see what happens as they see that the price goes up 40,000, 50,000. Now we're close to the all-time high of 60, 65,000. And that's when you see, institutional come in. You'll see there's a lot of stable coin. I don't have it here to show you, but there's a lot of stable coins on the exchanges right now. And you can consider that being dry powder. That is money that's sitting on the exchanges waiting to be used. And it's waiting to be used in primarily Bitcoin. We see Bitcoin dominance is up. And we also see something very interesting too. We saw this in 2017 as well, and that is Ethereum. Ethereum is starting to lose value to Bitcoin, and all the other altcoins are starting to lose value to Bitcoin. And if that trend continues, we should expect to see, a real outflow of capital from the altcoins, just like we saw at the end of the 2017 cycle. I think people that are invested in those are taking higher risks, and when they want to reduce their risk profile, they reduce it into Bitcoin because they understand that Bitcoin is now on the move, and Bitcoin is going through a expansion phase, just like we saw in 2017. All right, thank you very much. I hope you enjoyed that video. If you liked it, hit the like button, subscribe for more videos, and make sure you check out our website. We have a lot of really good content coming out on our website. We're also going to be announcing some service offerings. Our website is sascodigital.com. That's sascodigital.com, and we're looking forward to seeing you soon with some more videos.